What's going on, everybody? So why would somebody want to buy a Bitcoin mining stock or a stock that is just, related to Bitcoin solely for buying Bitcoin, right? So I'm not talking about coin-based exchanges, nothing like that. Why would people want to buy a MicroStrategy, right? I'm sure you've heard of Michael Saylor, MicroStrategy, or Bitcoin. There's a ton of Bitcoin mining stocks. Why would somebody want to buy this instead of just buying Bitcoin? And the answer is, I wouldn't say it's simple, but it shouldn't take too long to explain, right? But number one, I'll start with kind of the drawbacks. Number one, this does not necessarily go with the philosophical vision of Bitcoin, right? Which is decentralization, everybody having their own custody. To be fair, it's voluntary. Nobody's forcing you to do it. And just being clear, nothing said here is financial advice. And I don't personally own any of these stocks, okay? I just want to talk about the theoreticals, right? Number one is leverage. Leverage is basically, well, leverage could be anything, but it's using something to get a higher return, but there's risk involved, okay? So one form of leverage is debt, credit, right? So if you are really bullish on Bitcoin in a short time frame, let's say a year, you think Bitcoin is going to 250K this year or sometime next year, right? Within a year time span. And you just know it. You just know that it's going that high, right? Well, you would make a higher return on something like a MicroStrategy because they're able to borrow money to go and get more Bitcoin compared to you. So like you could borrow money yourself too, right? Like you could take out a loan, definitely not advising this, but take out a loan, go buy a ton of Bitcoin, and the loan's interest rate is 10%. So if Bitcoin goes up more than 10% over that year, you get the idea. You would make a higher return than if you just bought the Bitcoin. But who do you think is going to get a better, APR, right? Who's going to get a better interest rate on the loan? You or MicroStrategy, right? You or a big business. So MicroStrategy might be able to get, that loan, but, obviously much bigger, and they might be able to get a lower interest rate, right? And so it's a form of using leverage, but just more of it, or a more efficient way of using it, if that makes sense. So if you were going to use leverage like that, it could be more safe, or not more safe, more leverage to use like a MicroStrategy. Now, the Bitcoin mining companies are a little bit different because there's a couple different factors at play here. There is the debt aspect. Most of them are in debt, right? Most of them are not pulling, a lot of businesses use debt. It is what it is. But the Bitcoin mining aspect, there's another variable at play here, and that variable is energy costs. Because, if Bitcoin goes up a ton and they're using debt, but, they're also, their other form of leverage is energy, is using electricity, right? So, if electricity goes down that year, like the cost of electricity, or there's a huge, increase in efficiency on their machines, that could dramatically increase or decrease your, like, the company's returns, and then relative your returns, okay? So that is why someone would want to own a crypto mining or a crypto company related to mining or directly buying and holding Bitcoin or cryptocurrencies instead of buying it themselves. Again, doesn't necessarily align with the vision of most cryptocurrencies. And nothing's financial or investment advice. This is just, informational. And so, some people do it, some people think it's worth it, some people don't. It's definitely, some people think it's less risky, and that's not necessarily true either, because they think, well, if these companies go out of business, they could just, you're going to get, what's it called? You're going to get, like, if they go bankrupt, you're going to be able to, recoup some, whatever it is. But the reality is, a lot of these companies, if they get to that point, they will basically increase the amount of shares they have, and kind of like it's weird. It's a way of like dumping on you, but like it's legal, but it's, it has to be approved by certain people in the company. So it has to be like, if they don't do this, they're going to go out of business. But don't get the idea that it's risk-free, because it's not risk-free. Nothing with leverage is risk-free. Nothing without leverage is risk-free, but the leverage just could amplify your returns or, you know, make them much worse. So that's the truth of it. That's why someone would want to buy a MicroStrategy or a Bitcoin mining company. It has the potential to increase your returns exponentially or decrease your returns and increase your losses rather exponentially. And yeah, you need to know the variables. You need to have a thesis. You need to, you know, you can't just go into it and just be like, oh, I think this, right? Because again, especially with the mining companies, there's way more variables. It's debt, it's labor, depreciation, you know, on the machine, so many different factors. So thought you should know that. If you enjoyed the video, leave a like, subscribe, share it. It's my second video since being back on YouTube, and we will see what happens. Have a great day, guys.